please make sense of these numbers for us.
I don't think there's any problem with the data collection process. I think people just didn't spend as much money in certain categories during these months. What we're looking at are declines in motor vehicles and parts. That really pushed down the headline number. We knew motor vehicle sales had been off a little bit. Furniture sales down significantly. Gasoline stations, and remember, this data is collected on a dollar basis. So as gasoline prices go down, you have an effect on retail sales because they sell less in terms of the value of what they sell,
yeah,
not necessarily less gasoline.
I'm sorry, though, but people say that when gas prices go down, people spend the rest of their money on other things. So shouldn't it just be a wash?
Not necessarily. They don't. People say that, but that's not necessarily true.
Mike, let's find somebody to blame. Was it just the market overall and financial conditions? Because December was a pretty ugly month. And did people just sit on their pocketbook but saying, I'm not sure?
It seems like they did. And we saw some confirmation in the personal spending numbers. They weren't good either for the month of December. It looks like you also had the government shutdown. You had a lot of bad things happening at once. And people may have just decided to pull in their horns a little bit. The good news in the January numbers for our next guest is that general merchandise sales were up 0.8% after a 1.5% decline in December. So some good news there. Non-store retailers, though, and I know you're talking about Amazon, up 2.6% in January, and that may be gift cards coming in because those aren't counted until they're spent. And so everybody gets their gift cards on Christmas. They don't spend it until January. That starts to come in. The good news in this report, eating and drinking establishments up 0.7%, the ultimate discretionary spending. If you're pulling in your horns, you're not going out to eat, and people went back out to eat again.
What does it say to you that people roundly dismissed December's numbers as being wrong because it was such a huge miss, and that the revision was even worse than the numbers that we saw?
Well, it may suggest that the numbers were better than the market wanted to think they were. There's a tendency in markets
better, you mean more accurate? More accurate.
The tendency to dismiss outlying numbers, and they can be noise. They can be statistical noise. It doesn't mean that the numbers are wrong, but it may mean that for 1 month people didn't spend all that much money, and then they come back again. And when you look at it over the course of a year, you won't even be able to find these numbers because it'll all smooth out, but it looks like a big deal at the time. Overall, obviously, what we're seeing is a bit of a slowdown as we go into 2019. It isn't falling off the cliff because we saw a rebound from the December numbers.